This is Alan Bush with ADMIS. In the stock index futures, we did see higher prices in the overnight trade. We actually saw the S&P moving over the 1800 resistance area. Janet Yellen's written testimony apparently did not contain any surprises, with stock index futures remaining higher on the day. We also feel that within the next couple of months we will see new historical highs for both the S&P and the Dow futures. And we think that this will be Fed inspired, since we do believe that the Fed is likely to halt the taper later this year, which continues to be a minority view. Also, we have seen stock index futures performing very well on bearish news. That is also a sign of strength, so we would expect continued gains in stock index futures with what we are seeing. Over to currencies, the dollar index lower now for the fifth day. We do feel that the dollar will probably continue to weaken. We are thinking that most of the economic reports here in the U.S. will probably come in weaker than expected. And of course, that would put downward pressure on U.S. short-term interest rates, which is bearish for the dollar index. So lower prices for the dollar seem to be in store. Also, we are looking for higher prices for the British pound, since it does appear that the Bank of England will be raising interest rates possibly in the first quarter of next year. So from an interest rate differential point of view, the pound appears to be headed higher. Also, we are seeing some gains in the Australian dollar after an index of business conditions improved in Australia. So we are right now neutral to a little bit bearish on the Australian dollar, but I think I'd hold off on selling that one until it worked a little bit higher. But we do feel that the Canadian dollar will work lower as the Bank of Canada maintains an easier monetary bias. So I would be trading the Canadian from the short side. And credit markets seeing a little pressure today. Some concern about Janet Yellen's testimony as far as the taper is concerned. However, if we are right in our thinking that most economic reports here in the U.S. will come in on the weak side, that this market will probably work higher. So even though we are a little bit lower today, I would look for a recovery, possibly to near the unchanged level, and then longer term, I think we can see better prices for treasuries. Once again, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland.